Good afternoon, everybody. Welcome to our webcast on selecting an option strategy. This is where we get to determine what's going on in the market and what strategies might be best fitting for whatever market conditions we're in. Now, I'm going to ask you a question. Do you feel any different this week, say today, versus say a week ago at this time in terms of your bullishness, bearishness, neutral? Do you have your feeling on the market, your posture changed at all? I'm curious to know what you say. I'll tell you what I think. All right. Now, let's see. Joining us in the chat, I forgot to see who is joining us in the chat here today. Usually it's Cameron. It looks like it is Cameron. Thank you, Cameron, for being here. He's going to help me pick up any questions that maybe I can't get to or a little bit off topic. He'll help me out there with some of those questions. But as you have them, go ahead, chat them in. We want to help you out. And if you're listening to this on the recording, and I know lots of you do, when you have a question, go ahead and put your question in the comments section in YouTube. And I go back and look at those throughout the week, throughout the day, really, and get your questions answered very quickly as well. Now, I hope you're already a YouTube subscriber. It makes it so much easier to find our content if you are. And then make sure you're following Cameron and I on X. I'm Connie Hill CS, he's Cameron May CS, and that's a way that you can interact with us when we're not in our sessions and you want to ask us something. That's a great way to contact us. So feel free to use either of those methods. Let's go through our disclosures and we'll lay out our agenda for today. Options carry a high level of risk and are not suitable for all investors. What we talk about today is intended for educational and informational purposes. Don't consider it a recommendation. You'll want to use more than just technical analysis as you're doing your analysis for different trades you might be interested in. We will be using the Paper Money software application. This is what you download to your computer. It's the most robust version of Thinkorswim, but there's a bit of a learning curve to it, as you know. And so just be comfortable with that before you start using it in your live account. Investing involves risk, including the loss of principal. With long options, which we will look at today, investors may lose 100% of your funds invested. Past performance of any security or strategy does not guarantee future results or success. One thing you need to know different about Paper Money than your live account is that short options can be assigned anytime up to the expiration date, regardless of the in-the-money amount. And that doesn't happen to you in Paper Money. It doesn't assign early. So we don't want you to have that false expectation that it couldn't happen when in reality, it really could happen. All right. Now I'm a little bit curious to see what you guys are saying here. If your feeling and posture about the market have changed, what you think today versus maybe what you thought a week ago. Okay. So those of you that are just logging in, go ahead and chat that in. I want to take your results into consideration here. So number one, we always take a look at the market and really determine what kind of a posture do we have. Is it bullish, bearish, neutral? What exactly is it? And then we talk about, well, what strategies might take or might be most beneficial in whatever kind of environment we decide that we're in. We're going to look at a lot of examples. I have several example trades I'd like to get here today. We've got a little bit of a follow-up to do on previous trades. So we'll go to that point. So let me go ahead. Let's go over to our Thinkorswim. And I've got us sitting up here on SPX. And let me maybe tighten this up a little bit. Now I'm going to look at your comments here. So we're seeing not sure if bearish or bullish. So maybe, yeah, uncertainty, slightly bearish, bullish this week. Bearish with the FOMC next week. Okay, maybe a little, all right. Little concern there going forward, Scott. Bullish, neutral. You guys are all over the map, aren't you? And that's okay. It's okay to be maybe a little bit uncertain when we've had some changing conditions. Now I've got the SPX chart up here right now, as you can see. And what was the peak day? The peak day here was December 6th. When the SPX set a new all-time record, and it had kept doing that, right? We kept making new all-time highs. But then it started showing a little bit of weakness here. And so we were really seeing lower highs, right? As we come along here, and we had some lower lows as well. So we're having a little bit here of more, maybe a little bit more weakness. Technically, we could have said we had a descending triangle pattern going, right, where there's a lower highs and then kind of a flat bottom here, where in this case, the SPX was finding some support along here. But then last week on Friday, what did it do? Well, it closed outside of that diagonal resistance area. And today, actually, if you were a little uncertain here on Friday, today, having a nice strong bullish candle well above that diagonal resistance. So for some traders, that could be enough for them to change and pivot what their expectation is of the market. Because really where we're sitting right now, 6049, where we're closing today, is not that much off the highs that were all-time highs. Okay, let's take a look at a couple of indexes that were really strong today. The Dow Jones, we'll go $DJI. And I don't have the line here, but you can see it broke through that diagonal resistance last week. About the 15th is where it marched above that, and it's just continued. Now, it's not quite as high up to its previous peaks, but it definitely is looking a little bit more bullish than it had been. The Russell 2000 is really one of the strongest ones of the day. They ended up being up, it looks like 1.85%, so definitely the strongest index. And you can see here too, it had diagonal resistance, broke through it last week, but it wasn't super convincing, right? It was just kind of like right there, and it was right at here at this horizontal resistance. Friday, you're not so sure what's going on. And then boom, today, nice bullish candle, giving us the idea that, oh, maybe it's time for the bulls to make their face known, right? And sorry, I've got a lot of lines going on here to clean that up a little bit, but just kind of the similar idea. We had our diagonal resistance. Friday, we're not so sure. Did it really close above there? Was it meaningful? And then today, you know, the index was up a little bit higher, had a stronger candle earlier in the day, but it is staying, let's see, looks like it closed up about 0.58%. And so I would say it's well above this diagonal resistance. So maybe that helps us look maybe a little bit more bullish. Now, you don't have to be totally convinced that it's bullish, right? You might personally want to see a little bit more, more movement. Maybe another higher high. Or there might be some people that are looking for it to break above a resistance area and something that maybe is a little bit more horizontal. Maybe somebody might be looking in this area here where we had a top, 21,006, another top, pulls back. So if somebody maybe says, I want more confirmation, they might want to see a close above there. And so let's see, Motown Guitar says a week ago, I thought we were at a top. Now you're not sure. Well, we had put in a top and then some lower highs here. And so the market's just really dynamic. It changes a lot. And when I was a newer trader, that was one of the things that I neglected to pay good attention to was what is the overall market doing? I was just so laser focused on my positions. And in reality, top look should be what is the overall market doing, because then it gives us a lens to look at our positions from, whether we have a bullish lens, neutral lens, bearish lens. Okay. Now I'm going to say overall, we're probably a little bit more bullish now. Could it just be slightly? Yeah, for some people, maybe it is just slightly. But let's go back here and talk about maybe what strategies might be more ideal. So here on the left side, we've got our bullish strategies. And, we could participate in any one of these. I would say the synthetic stock is if somebody is really bullish on the market, really bullish on their stock that they're looking at. Because they're putting in a short put as well as a long call position with the idea that they're trying to kind of mimic stock action by being able to get something close to a 1 delta. So something maybe a little more like a spread might be a little bit more moderate, right? It's not like you're going, yeah, I'm full bore bullish, but maybe you're bullish, but you wanted to maybe do a spread and have a little hedge in your position. Now, I'm going to say probably not many of you are looking at a ton of bear strategies, although there could be some that fall in our lap. And then if the market were a little bit more neutral, we might be considering more iron condors. Maybe calendar spreads are really good for neutral type markets. But I'm going to suggest that we're probably going to be favoring more this left-hand side column. All right. Doesn't mean you have to, but that does mean what we're going to be looking at here today. So let's jump on over. We're going to go back to our Thinkorswim here. And to begin with, I want to review just a couple of trades because I really would like to spend the majority of our time here together on new positions. Okay. Last week, we got into a position we put on in our class, Eli Lilly, and it was bearish. All right. Now I'm going to come zoom in here. I do have the ATR on here. The reason I put the ATR on there is so we could see, are we starting to see bigger moves, right? Because this is the average price over the last 14 days. We start to see bigger moves and therefore this value go up, or is it going down? And through this period of time, you can see these kind of little short stubbier candles. Yeah, the ATR wasn't as big. And when we start having bigger moves in the market, then the ATR goes up. And it measures for both bullish and bearish moves. Okay, just whatever was the range on the day. Now we got that last week is where we met here on the 14th. And of course we meet after the market's closed, which, if there's positives and negatives. Positive would be, we know for sure if we have a close below the low of the high day or a close above the high of the low day, if we're looking for something bullish, we get more definitive versus say a move, say in the first 30 minutes of the day, we're having a class. We're not so sure if the stock or the market's really going to be closing there. So we entered our position. It got us in here the next day and went up one day and then had a big down day. All right. We put on a credit spread and we actually got out on this day early in the morning, hit our order, let us out of the trade. What were we doing? We had put in to do as a 790-800 short call vertical. We were looking for a credit of, we put it in for 287. We actually got filled a little bit nicer than that at 290. And then you can see early here in the morning, Eli just jumped down. What did it do? We had put in an order to say, get me out. If we get 70% of that, let's just get out and be on our way. Sure enough, it did it. Great. Nobody should feel bad about something like that. Okay, that you hit your order, you're like, happy camper, on my way. Let's go do another trade, right? Sometimes credit spreads are trades of patience, and I kind of prepared you for that. But in this case, it just did just fine. Now I'm going to show you this one. This was one of the other trades we did, and we actually didn't get filled on it last week. Somebody, the driver here, did not pay close enough attention to what was going on that morning. I think I had another assignment. And so I didn't make sure that we got filled, so we didn't. Okay. However, let's see, were we right in the analysis? Okay. So you can see, yep, our order expired. Therefore, our order to buy the spread, or in this case, sell the spread, didn't go through. But did we have it right? We were getting in here on a breakthrough resistance. Okay. And so we were looking at that on the 14th. We would have wanted to have got in here on the 15th, right? And it's gone up a little bit. Definitely is moving in a positive manner. So we more likely than not would be up on the trade. But since we're not actually filled, we can't really determine that. Okay. So that's the update on our positions. And that's all we really have out in, we don't have any positions anymore in our class account. So that's why I wanted to maybe go through quite a few new positions for us to put on here today. Kevin says, I like synthetics with downside protection. Very good. AP514 says a win is a win. Absolutely. You get a win in 2 days, great. If it takes us 2 weeks, okay, so be it. But yeah, getting a win really quickly, can't feel too bad about that. Now, let's take a look at our first stock that we're going to take a look at here today. And let's go ahead. Let's pull it up. Had a big day today. Let's see where it actually closed here. Reddit, RDTT. Now, something that's kind of interesting about this stock is we had put on a Fibonacci. Its extension came up here to the first like new target. And I had that well in place somewhere, I think probably back around maybe one of these couple of days, okay, after it broke through its previous peak. Interestingly enough, notice how many touches came up here right to that area. In fact, it looks like it was kind of acting a little bit as resistance. If I were going to draw a resistance line in here, I'd probably maybe draw it a little bit higher, trying to hit some of these peaks on these candles. So maybe more about 184. But whether you're using this 177 line, really today it looked like it had a decent breakout from it. You know, it had been running up into the Fibonacci area and just kind of pulling back, and today it didn't. So really, we kind of have a little bit of a breakout. Looks like we had some extra volume here today. We like to see extra volume when we're seeing a breakout signal. Now, we can do a couple of things here. One, we could say, well, where do we think the next target could be? And we saw how well this Fibonacci worked. Where would the next extension be? It's going to be clear up here, okay? It's up here quite a ways, up to $240. Now, you might say, well, let's see if we can find a move maybe not quite so far up, right? And so how we might do that, I'm going to delete our Fibonacci that we have in there right now. We're going to put in a new one. So we're going to remove that drawing. And again, we're going to look for it to retrace a move, okay? In order to retrace a move, we have to have an absolute top. We have to have an absolute bottom, okay? So meaning we wouldn't be picking any of these in between days. All right, I should maybe put in here any of those in between days. Let's go ahead here and let's measure the move. And we're going to take this high point on this candle, and we're going to come back here to, I'm going to take this bottom of this red candle right here. Now, if we're looking for a bullish extension, we start at the top and pull it down. If we're looking for it to go lower, we start at the bottom and pull it up. So as I grab my Fibonacci here, and that's what that little icon is. I took out the name. I just have the little percent sign there. We're going to start at the top of this candle, and we're going to go, like I said, to the bottom of this red candle right there. Okay. That means our 100% move is right there. And where would our extension be? Now, that's not all the way up to 240. That was pretty big move, right? This next one gets us to about 223. Now, it doesn't mean that it's going to go straight there. It doesn't even mean it will go there. It's just that that's what is looking like the next move might be, but it could take some time to get there. Now, we could use that as a target, or we could just put on a trade and let other things determine what our exit signal might need to be, okay? On this particular one, I'm really looking to do, let's come over here to the options. This one is widely traded, okay? Traded over 7 million shares today, and that means the options, more likely than not, are going to be more liquid. Now, it looks like today was the first day of trading. Here's my open interest column. Let's look on the put side. And here's the volume. So you can see, like every other strike price here in the $2.50 increments is 0. What does that tell us? That tells us that today was the first day of trading for that particular strike price. So we had in 160, 165, 170 before today, and now it has the ones in the $2.50 increments. Now, we are looking out on this particular one. We're going to have that target in mind, but we're going to use a spread. Why would we use a spread? Look how high the implied volatility is that's priced into these options. And I do want to know, it has options on the 12th of February. Well, is it possible that maybe the stock could make the move that we want it to make before February 12th? Yeah, it certainly could be possible, okay? And so what we're going to do with that long call vertical, we know it has a way maybe to get there. If somebody wanted to be more aggressive and not put on a spread, you certainly could and maybe use that as your potential target. up there, that 223. But we're going to do it based on percentage of the gain. And so what we're going to do here, let's see if this one still makes sense to do. I was looking at 185, 190. Let's see if this still makes sense. You can see it's an expensive stock and very expensive options, which is why some might say, well, rather than having it cost me over $2,000 for a contract, let's do a spread, right? We're going to kind of fix our gains. We're going to say, yep, we're going to put in a max gain here. It can't go any higher. But it's nice to be able to have a little bit of a buffer there when you use a spread. So we've got $2.50 here, but I was going to change it to one. Let's see. I think I hit the wrong number there, didn't I? Let's go 185 to 190. Okay, 185 to 190. So let me just change this. All right. So we've got a $5 wide spread. $2.43 is what the debit is on it. So we would be risking $2.43 to gain what? $5 minus the net debit right here would be what? $2.57, right? $2.57 would take us up to $5. Okay. Now, some people might like that. Some people might not. That's what we're going to do for our trade here. What we're going to do is we're going to say, if we get a chunk of it, just like on that credit spread that Eli Lilly, if we get a chunk of it, man, we're going to be happy campers. We're going to get out. And we also would like to be out before the earnings date. Okay, so we're going to keep that in mind. This is not to be done for an earnings trade. Now, if you want to do it for earnings, no problem. Just for our example, that's kind of what our approach is going to be. Now, if we could lose 243 here, and I'm saying here in our position sizing, we don't want to risk more than $1,000 in any trade. How many contracts could we do? We can do 4 of them, right? So we're going to put in our 4 contracts. We're going to make this first trigger sequential. We're going to create an opposite order here. And then we're going to say, when are we going to buy it back? So we're going to use our calculator. I'll use this calculator on here. All right. So 5 minus 2.43, that's our 257. If we get 257, or say 70% of that 257, let's take it. Okay. So now we're going to multiply by 0.7. And that value is going to be 179. Now, this is kind of some leftover stuff. So 1.79 is where we're going to buy it back. We're just going to change the number here. Oh, that's not true. We're going to take 179 and add it to 243. Let me see if I can add that here. Okay, we're going to buy it back at $4.22. Okay, $4.22. We're going to be happy about it. We're not going to try to get every little penny out of it. It's really hard to actually do that. And it's nice if, you know, you can just cash it in early, be on to your next trade. So that's what we're going to attempt to do here. All right, so we're going to hit confirm and send. We're going to throw this in our bucket of option strategies, send it on its way. All right, now. Cameron just put something in the chat that can be really helpful because I'm not showing you exactly how to use Fibonacci's. We talked about the concept, but not in real depth. Cameron's put on here, and he has a great example of a video that he did a little bit ago highlighting Fibonacci's and how they work and the nitty-gritty of the numbers and the ratios. Okay, so Cameron, appreciate you putting that into the chat there for those that are interested in that. Now, Chris says, why not put in a percentage for price to exit? And actually, you may have typed that in, Chris, before I actually did that, right? Because that's exactly what we did here. We want to pay hopefully around 243, get out when this thing is around 422. Okay, so right on board. All right, next one up. This has kind of been an interesting one. I don't know if you guys pulled up any of my entries on Twitter today, there's a scan I run every day. It's called our early morning mover scan. And I'll kind of see what comes back in the scan. We're basically looking for upward trending stocks today, as well as the last 3 months, as well as the last month. If they aren't up today, they won't come into that little scan, okay? But I'll kind of group them because sometimes we'll see a bunch of industry sectors, different stocks in different sectors, having a lot of strength. And that's where all of these trades came from today, was from that scan that I ran. I'll put a link in the description of what that scan is, all right? So that if you're interested in it, you can go back and run that scan yourself, see where the results came from, all right? As you can kind of see on here in my watch list, if you can even read, it says early morning. It doesn't tell you movers, but it is our early morning movers scan. All right, VST, Vistra Corp. Now, this is a utility stock, guys. This is a utility stock, and I'm going to come to the watch list here, and I'm just going to scroll down. Here's our VST. I've got some calculations, 1 week, 1 month, 3 months. What is the performance of the stocks that were coming back here? So this particular stock up 8% in a week, up 39% in the last month. So is this thing moving? Yeah, this thing is moving quite a bit. And then the last 3 months up 49%. Yeah, so these are a lot of these stocks, not all of them, but some of these are really stocks that are on the go. You can see on this ATR, see how that's getting larger, larger, larger? That's letting us know, yeah, some of those moves are starting to become bigger than maybe what they were through here, where they were going down a little bit and maybe a little bit sideways. All right. Now, on this particular one, we are going to look for something very similar. We're not going to go out that far, but we're going to go out again. Our target, some people like to use, is a window of 20 to 40 days worth of time, whether that's a short spread or a long spread. Now in here, we do have some extra implied volatility, which kind of insinuates that options are a little bit on the expensive side. So again, we are going to bring you into focus using a debit spread. We're going to go here. Let's see if these numbers still work. They looked really good when I was in them earlier today. But on this one, let's see. Let me show you what I was looking at on here. It's actually looking to go, I told you 20 to 40 days is a window many traders like to look at. Look what we have here. It's 17 days. So we're just under that little threshold. Say on Friday, we would have been in that range. It probably would have been 21 days. All right. So here we are at Tuesday. Market was closed yesterday. But look and see if this still maybe is a little bit feasible. Again, here, I'm looking to do the 185, 187.50. So just the $2.50 strike price here. Let's go ahead and pull that up. I have my open interest and volume column so we can see, we want to trade where other contracts are going on, okay? Now, quite honestly, the 190 has a few more contracts, so we could spread it out by, instead of 250, by $5 if we wanted to. Because the time frame we're looking at is a little bit shorter, we're going to look for a little shorter move. So we're going to keep the 187.50. Where's the stock right now? It's at 185.35. Okay, so we're looking for it to move, $2 and some odd cents. Okay, is what we're looking for the stock to do here for this one. Now it's $1.25. So on a $2.50, we're going to risk 125 to make 125. If you go out and say, well, what percent return could that be? Well, yeah, that could be theoretically, if we got the entire max gain, 100% return. Now we're not gonna try to shoot for a whole 100% return. We're gonna just do a portion of that. Okay, let's collapse our watch list, bring back our calculator, clear things out. If we are trying to get a percentage of $1.25 of our max theoretical gain, let's multiply that by 0.7. And that says, okay, we're going to look to add 87 cents. So let's add 87 cents to $1.25. That says go buy it back at $2.12. Okay, So that's what we're going to do. Now we can do here, we can do 8 contracts. Right? We'll go ahead with our 8 contracts. If you take 8 times 125, what's that going to be? Pretty close to 1,000 there. Okay. We'll do a first trigger sequential. We're going to do the same thing. When we get a chunk of it back, all right, we are going to look to get out. So we're going to say create opposite order. And we're going to put in this value here of 2.12. Again, we're not looking to get all of it. We're not being greedy. We just want a chunk off the bone, chunk of that meat. All right, we'll hit confirm and send. We'll just kind of look up here, see that our max theoretical loss is right there at that $1,000, okay? It's letting us know, hey, this is a non-standard expiration date, meaning you're working with a weekly, not a monthly, and this is a shorter time frame, okay? So we're gonna have to probably not be as lenient with it if it starts to go the wrong direction. Our expectation is that it's gonna move though. And we'll go ahead, we'll put this in our bucket here of our option strategies, and we're gonna send that off. Now, Chris is giving me maybe a little bit of a clarification here. Let's see here on what you meant. You said put the percentage instead of calculating it. In other words, on Thinkorswim, have it calculate it. Oh, that's a fun thing to do, Chris. I like to show that sometimes. Not sure if I'll be able to show that now, but I will put that on my list for next week because I do like to show you how to let the system calculate for you versus you do the calculating. And we can set it up as a template if you do the same thing all the time. Okay, so I do appreciate that. Dragon says, what are the TGEY on VST? TGEY. I'm not sure what you mean by that. Maybe Cameron can tell me what that is, or tell me a little bit more specifically. Yeah, it's an electric power company. Yeah. All right, and we didn't put a specific target on it. What we did do is we said, we get a chunk of that spread, we're gonna take it. That is going to be KTOS. KTOS is a defense and security stock, okay? Look what it had. It had this beautiful flagpole. 2 days in a flag and 2 to 5 days is ideal. And boom, the breakout today. I copied the height of the flagpole. I tagged it on. And here what we're seeing is you can either put the flagpole down here at the bottom edge of the flag, or somebody could put it as where they see it breaking out. Either one is just fine. Where I've put it is a little bit more conservative of a target, okay? On this, you can see the ATRs, basically taking into account, yeah, it's finally having some big moves as far as the average true range. So on this one, we are going to have a target up here at about 39. It says 39.79. Let's do 39.50 as our target. We'll come back just a little bit off of that range. And this is a fairly low price stock. It does have decent implied volatility in it. So what we're going to do, we're going to make sure the option, we're not going to do a spread. Somebody could if they wanted to. We're looking to make sure we have at least some intrinsic value on this option. So we're going to do the 35s if you wanted more intrinsic value to kind of soften maybe how expensive the options are. You could go deeper in the money, okay? For our purposes, we're going to try to get the midpoint price here. And we are going to do, we can do 3 contracts is all. So we'll put it up to 3. And then we are going to put in that target. Okay, so let's do our first trigger sequential, create an opposite order. And on this opposite order, we're going to make this become a market order. And then we're going to put in the price of the stock. We're going to do that in the gear. And our method, trigger if it gets greater than or equal to 39.50, a little bit off the high point of that wherever the flagpole is giving us a target for. We're going to go 39.50, and it is good till canceled. We're going to send that in, and that's going to go in our bucket. All right. I'm glad we were able to repopulate our portfolio. So as this, just kind of a summary here as we wrap up, what trades did we do? We'll come out here to, let's see here. Activity and position, here's our working order. So we just did that long call, 35 strike on KTOS. Reddit, we're looking to do a long call vertical, the 185, 190. And those are the new trades we put in. All right. Now, I do not think we had any survey today. All right. So you're off the hook there. But if you found this helpful to review maybe some of the different strategies somebody might consider using in their practice account and to do some practice trades, and if this was helpful for you today, go ahead and hit the like button on your way out here today. Again, I hope you've hit that blue YouTube logo, lets you know that you can subscribe to our Trader Talks. It allows you to find our content so much easier. I love subscribing to different channels in YouTube because I do listen to quite a few podcasts. It just makes it really easy to find the information. All right. I'm going to make a note that next time I'm going to teach you how to build that template. If you always do things the same way and you want Thinkorswim to calculate it for you. So we reviewed the market, looked at a lot of different examples here today, and kind of talked about, which ones maybe some traders might be preferring to look at. All right, I will take a look at your requests. All right, as we finish up here, I'll go back and look and see if there's anything that I missed or a request that you have, take a note on it. And then I'll plan to see how much of that we can get covered our next time. Cameron, thank you for your help here in the chat. Thank you to each of you. If you have questions, go ahead, send it in, and I'll be happy to answer those. Okay, you guys have a good evening. We'll see you tomorrow morning at the opening bell. Bye-bye.